Hello and welcome to FinextraTV. I'm Alex Lippic, and joining me kindly in the studio today is Richard Callas, Client Solutions Director of GFT. And today we're going to be discussing the recent findings of the GFT Banking Disruption Index. Richard, it's great to have you back in the studio. How are you?
It's great to be here. I'm very well, thank you.
Absolute pleasure. And what an interesting topic to be discussing as well today. So let's start by setting the scene, if we can, Richard. Why did you decide to commission this research and what were you hoping to get out of it? Let's start there.
Okay, so GFT have been doing the Banking Disruption Index since 2022. We started the Banking Disruption Index to create a barometer of customer sentiment around the digital products and services that their banks are offering them. And that goes across traditional banks and also the new challenger banks. Previous surveys, we've covered things like trust in banks, artificial intelligence and consumer sentiment around the use of artificial intelligence. We've looked at security and fraud, and we also did a very fascinating research actually on overseas spending and consumer awareness of charges around cross-border transactions when they're on holiday. This time we thought, given the cost of living crisis, it would be interesting to look at the ways that customers are managing their debt and their ability to save, obviously with additional pressures on their finances, and look at what the banks are doing to support them with managing their debt and providing savings facilities.
Sure.
What we found interesting from the survey is that the headline is that British consumers are actually sleepwalking into a financial crisis. And a lot of that is to do with the levels of debt that they're carrying. When we look at the average on credit cards alone, the survey came back that consumers have an average of £2,700 regularly on their credit card. And a third of responders also regularly go into their overdraft, with 25% of those frequently exceeding their overdraft limit and going into unauthorised overdrafts, obviously with additional fees and charges that apply to those. When we looked also to see what mechanisms that consumers are using to actually track their finances, we found 39% of people have no mechanism for tracking their finances at all. And of those that do, 26% are using Excel spreadsheets. So it demonstrates that even though the banks have facilities, consumers are often unaware of what they are.
Really interesting insight. You mentioned debt there. Presumably banking customers are therefore struggling to save. Would you agree with that one?
Yes and no. So it's interesting that the responders, 84% said that they had a willingness to save. However, only 69% of those were actually able to save. When we looked at the amounts on average that people were able to save, the average saving was about £227. And in lower age groups, 18 to 24-year-olds, this dropped to £181 and then rose steadily as ages increased. But then once it got to over 55, then the ability or amount that people were able to save actually tailed off again, with the older age groups saving less. There may be a number of factors that explain that. For example, as people are older, their children are older, their expenses become more, especially around perhaps tuition fees for university, etc. But it did show that the willingness was there for people to save and to save regularly.
Interesting hearing those insights and those demographics as well. So I guess on the one hand, we have those that are, struggling with the rising cost of borrowing and also the rising debt as well. And then on the other hand, you've got this real desire to save. What are banks doing to help with that dilemma effectively?
So banks have tried to help for a number of years. They have implemented financial planning tools, budgeting, personal financial management and financial wellness. Often those are tacked on to the side of existing online or mobile banking offerings. When we asked consumers, what they felt towards that, only about 42% thought their banks were doing enough to support them with their financial management and savings. Only 5% actually admitted that they had ever used a financial management app. There are a number of vendors in the market that support banks as partners, so the likes of Personetics, Meniger, Moneythor, and obviously Visa's Tink. And they do provide the banks with that financial mechanisms, planning, budgeting, savings pots, for example. And all of those facilities exist. But the more traditional banks, unlike the challengers like Starling and Monzo and Chase, who have brought that front and center into their customer experience, the more traditional banks, as I say, often have these as navigate to features, and customers just aren't aware that they're there. Clearly, with the newer challenger banks, they are doing more and putting it more front and center. But then when we looked at the survey, 44% would rather trust a traditional bank as opposed to 23% that would trust a challenger bank. So there's clearly more that needs to be done on both sides, whether it's traditional or challenger, to actually make customers and consumers aware of the facilities and function that they have.
Yeah, I mean, it's interesting you say more needs to be done. It almost sounds like it's a bit of an education as well to kind of notify people that these opportunities are out there. So in terms of support, every business requires a support network, so do customers as well. So what more do you think could banks be doing to help the needs of these customers now and in the future, Richard?
Okay, well, it will come as no surprise that I will sort of advocate technology as an enabler for the banks. Clearly, when we look at the challengers like Starling and Monzo and Chase, for example, they have actually used technology and brought that into the front and center in the customer experience. There are more things that can be done when we start looking at the market. There are things like savings pots. So traditionally, personal financial management had the notion of spending categorization for spending insights. We're now looking at having spending pots, so being able to, using Zipjar for just to quote one, to be able to allocate specific pots of money, whether it's for utilities, groceries, etc. And that allows customers to actually actively understand how much they're spending and plan their spending as an implicit part of using their banking experience. And we're seeing that coming more. Obviously, artificial intelligence is going to play into it very much, being able to provide deeper insights around spending behaviours, forthcoming cash flow, and actually help consumers really understand how their money is being managed.
It's all really interesting. I could sit here and talk to you all day, to be honest, Richard, about this. But thank you so much for sharing the insights, and it'll be fascinating to see how things develop moving forwards. But in the meantime, we'll let you get back to your busy schedule. Thank you so much for being here.
Thank you.
Thank you.